happy to know that a lot of people are actually doing the homework as well. Very good. Awesome. 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 Fantastic. And if you don't have any questions, I suppose the whatever you read was clear to you. All right. Atul says read, but I feel I need to read again. All right. Fair enough. Rajesh says my voice is breaking. I'll be a bit louder today because I got feedback yesterday as well that my voice was breaking in between. I actually change my tone also in between whenever I'm talking. So because of that, whenever I'm in low tone, that's the time you may not be able to hear me, but I'll try to maintain a high tone today. All right. If in case, let's say you miss anything in between, you're not able to hear, please let me know in the chat. I'll repeat again. All right. Very good. No more questions? No more questions. All right. So let me actually explain the rule of 72. Shashank says one query. All right. Please answer, please ask your query, Shashank. Do you want me to unmute? Hi, Shashank. Okay, Shashank, I can't hear you. You can maybe type it in the chat. All right, so while you're typing your question, I'll just maybe explain the rule of 72 again, right? Now, the rule of 72 was studied, is taught to you so that you can do simple mathematics around compounding. Simple mathematics around compounding. That's the use of rule of 72, right? It's a hack or it's a trick that you can use to basically wrap your head around what kind of growth we are seeing, how much time will it take to actually double our capital, right? So it's very, very simple. It's very, very simple. There are two, let's say, two factors in the rule of 72. One is the annual growth rate, the annual growth rate. The other is the number of years it takes to double. Number of years it takes to double your capital. Double your capital, right? Now the formula is very, very simple. Number of years is equal to 72 divided by annual growth rate. If you are given the annual growth rate, you can calculate the number of years it will take to double, right? Double your money, right? So 72 divided by growth rate. Inversely, if let's say the number of years to double is given, you can also calculate the growth rate, right? So growth rate will be equal to 72 divided by number of years it took to double. I also explained a story yesterday, which actually where we use the rule of 72 as well to understand compounding, right? We understood that the Indians, native Indians of America were very, very smart, and they actually did a very good deal, right? Mr. Tapan Podar says, how would you define CAGR? CAGR is compounded annual growth rate. That is the growth rate that I'm talking about when it's, let's say, when I'm talking about normal growth rate, right? So you mean the definition of CAGR? CAGR is a concept, right? It's a compounded growth rate. It's a concept which says that you will earn interest on top of interest, right? You will earn interest on top of interest. So the principal amount keeps changing, right? In simple interest, what happens is, in simple growth rate or simple interest, what happens is, let's say you have given a loan of 100 rupees to your friend, right? And you've given a loan at 10% simple interest rate. Simple interest rate. Now, that means that every year he'll just be returning 10 rupees to you. Every year he'll just be returning 10 rupees to you. That's a simple interest rate, right? First year, second year, third year, fourth year, he'll be returning 10 rupees to you, right? When you say, let's say it's compounded interest rate, then we'll actually say that this 100 rupees by next year actually becomes 110, and now he has to, in year two, he has to return 11 rupees now to me. The EMI is actually compounding, right? So compounding is interest on top of interest. So you can also say the principal amount is changing. The principal amount is changing. All right. I hope the rule of 72 is very, very clear. Okay, I'll just ask a very simple question. Let's say any stock is growing at 12% growth rate, how many years will it take to double our money? If it's growing at 12%, it'll take 6 years. Awesome. Amazing. Right? Now I'll ask a question which is not related to rule of 72, but which was covered yesterday. Right? If I have to 10x my money, in 10 years, what is the ballpark growth rate that I'll be targeting? 25%. 25 to 26% is the growth rate that I'll be targeting. 25-26% is the rate that I'll be targeting, right? If I have to, let's say, target 100x in 15 years, what is the growth rate that I'll be targeting? 35 to 36%. So always remember that. It's going to be very, very handy in today's class. All right, so let me just actually share my screen as well, and then we can get started. Awesome. I hope this is visible. Is the screen visible to all of you? Yes. All right. Let me actually adjust my screen. All right, so today we are actually going to start with the sector and the theme analysis. These PPT, the slides are actually from the previous bootcamp because nothing has changed from there, right? So where did we stop yesterday? We stopped here, right? At the business growth engine, right? So I'll just give a brief again. Business, if you consider it as a black box, all the processes, the entire technology is within that black box, That business black box only does one thing really well, which is to convert capital, which is input, into profits, earnings, revenue, which is output, right? If you reinvest some part of your revenue, some part of your cash flow into the business again, you will have tremendous growth. Right? Let me actually take an example which I took in the masterclass so that I can reiterate my point again, right? So let us say I start a lemonade stand, right? I start a Nimbu Pani wala stand, lemonade stand, right? In India, in Delhi, let's say, right? And let us for a second assume that I am the only lemonade stand in Delhi, right? And Delhi is a very, like, it's a scorching hot city that's there. So there will be a lot of demand. For lemonade as well, right? So I am the only lemonade stand in Delhi and I start a lemonade stand, right? So let's say on day one, I invested 100 rupees. I bought some lemons, I bought ice, I bought glasses, disposable glasses, etc. I'm so sorry. So I invested 100 rupees into the business. At the end of day one, I did 200 rupees of business. Which means I did 200 rupees of revenue. I made 100 rupees of profit. Right? Now on day two, of course, I'll not be starting off with 100 again. I'll be starting with a little bit more amount because I've also got 200 rupees from yesterday, right? 200 rupees are lying with me, right? So let's say I start with 150 rupees on day two. Now, because 100 became 200 on day one, 150 will become 300. Right? If the efficiency of the business remains same, right? When we come to the company analysis part, I'm also going to introduce a couple of metrics, and there I'll explain that this efficiency metric is called ROC. I'll explain that in detail also when the company analysis part is going on, right? So the efficiency remains same. That means if I keep whatever money I put, that money will be doubled by the company in terms of revenue. It will be doubled, right? Now, what I just explained was the efficiency or ROC of this business is 100%, right? It's doubling the capital, and there is decent amount of reinvestment also into the business, right? Now, let's say if I continue doing this, not only for like some days, but for many years, many years. Do you guys feel that my efficiency will remain 100%, or my efficiency will like keep doubling my capital even after 5 years, even after 10 years? No. Why is that? What is the constraint? Shashank says there'll be competition. Rudra says demand, right? So think about this. I gave you the hypothesis first that I am the only lemonade stand in Delhi, right? And I start to expand, I start to grow. In the initial few years, there'll be a lot of demand because there is a lot of unmet demand. I am the only player who's actually serving that demand. I am the only company who's serving that demand. I will continue to grow like anything, right? So whatever money I put into the business, it'll keep doubling because I still have demand, right? My demand will only stop, or let's say my growth will only stop when either the demand or whatever supply I'm having actually meets the demand. Supply now meets the demand, or I get competition. There could only be two things. Right? The assumption is that, let's say, out of 1 crore people who are, let's say, residing in Delhi, every year, maybe 20 lakh people will be drinking lemonade. Let's say only 20 lakh people will be drinking lemonade, right? So I will continue to grow till the time there are still some people left in that 20 lakh pool. Once that 20 lakh pool is taken, either by me or by the competition, then after that, I have to think of other avenues of growth. Now, other avenues of growth in this case might be either launching in a newer city, or let's say eating away the market share of the competition. Let's say there are 2 players now which are competing with me. So if I eat away that competition, if I eat away that company also, then also I can grow, right? Or the lemonade market itself is expanding. What do I mean by that? 2021 May, there were 20 lakh people who were fond of lemonade. Now that market itself is expanding, which means every year there are 5 lakh new people who become fond of lemonade every year. Newer customers enter into the segment. Right? So don't worry about all these like examples I'm giving you of growth. I'll actually be explaining that in detail. The summary here is growth after a certain point of time. Is not only dependent on reinvestment rate and efficiency, but also dependent on sector dynamics. Please note it down. Growth after a certain point of time is also dependent on sector dynamics, right? Now, what are these sector dynamics? We'll actually be talking about that in detail, right? What are the different kind of sector dynamics that we have to consider? But is it very clear from this example how a company will actually hit a ceiling? Ceiling means after that it cannot grow, right? After that, the growth of the company actually is dependent on how the sector dynamics are. All right. So this business growth engine is very, very good, but this also is in a way dependent on sector dynamics, right? Now, in sector dynamics, what are the things that we have to take care of? Here, we will actually start with the pond analysis first. Pond analysis, pond analysis, right? Not the cream. Ponds wala cream nahi. Pond analysis, talab wala pond, right? Pond analysis. All right. We'll start with the pond analysis. That's the first concept that we'll actually learn, and that's the most important concept that we'll learn, the sector analysis part. Pond analysis. All right. Now, any company will be able to grow in relation with the sector dynamics, in three ways, in only three ways, right? Now I've taken the example of the analogy of fish in a pond, which will actually make things very, very clear for you. It's a very simple analogy. It will make things very clear for you, right? The first way a company can grow in a sector, the first way a company can grow in relation with the sector is fish gets bigger with the pond. Fish gets bigger with the pond. What does this mean? Because the sector is expanding, the company is also expanding within that, or let's say close to that rate, right? Pond gets bigger, company gets bigger with in the same direction, or in the same, or almost of the same value, right? The technical term here is market share of the company within the pond remains, company within the sector remains the same. Market share remains the same, but because the sector is expanding, company is taking benefit of it. Right? Pond getting bigger, fish getting bigger with the pond. Pond getting bigger, fish getting bigger with the pond. All right. Company is maintaining the market share, right? Maintaining market share. Vineet says, give example. I'm going to give examples. All right. Maintaining market share, but the sector becoming bigger, company becoming bigger, right? Now there are three ways that this can happen. Right? First way, increasing penetration or premiumization. And this is where I'll give examples. Okay. I'd say for 40 years ago from now, let's say 1980s, the percentage of, let's say, the percentage population of India, which was using, let's say, a product called toothpaste, percentage population of India using toothpaste might be in 50s or 60s, 50-60%. That's it. Rest of the people were actually using, like, the datun is there, that stick is there, etc., right? Over the last 30 years, penetration of toothpaste increased. Right? Now it is at the, let's say, almost close to 95, 98, 99%. So almost in all Indian households, there's no new user getting added into the toothpaste industry, right? So the first very, very simple way of, let's say, the sector becoming bigger, and with that, the fish becoming bigger, is the penetration in that sector is increasing. Which means new users are getting added into that sector every year. New users are getting added into the industry every year. You could take an example of, let's say, air conditioners. Very few percentage, almost like 3 to 4% of Indian households have air conditioners, right? The penetration of air conditioners is increasing in India, which means the air conditioner industry is becoming bigger and bigger. Now, all the companies in the air conditioner sectors are getting benefit of it. Just because the industry is increasing, each company within that sector, within that industry, is growing really big. And it will be growing at almost the same pace, which means, let us say, the industry, air conditioner industry, is growing at 25% every year. Let us say, if the market share within that sector, within that industry does not change, each company will be growing at 25%. And if it is growing at 25%, I'm not making a claim here. If it is growing at 25%, then definitely it will meet our criteria of, let's say, becoming 10x in 10 years, right? Is it clear? Penetration. I've just explained penetration. I've not explained premiumization till now. Is it clear? Penetration means how many new users are getting added into the industry, into the sector every year. Right? Now you might ask, how is penetration calculated? So there are various surveys done. Mostly what happens is, let's say, if you talk about any FMCG product, the last leg of the supply chain, which is retailer. If retailers keep buying the same kind of product quantity, if like same kind of toothpaste quantity every year for the last 3-4 years, which means no new users are getting added, the sale is now constant. Sale numbers are almost like constant. Sale number is almost constant. Shashank has a query. How permanent is this expansion? Very good question. Even the sector might hit a ceiling. For example, penetration can only be at the max 100%, right? So for products where let's say the penetration is lesser, like 30%, 40%, 50%, and it is increasing very swiftly over the next 10 years, 15 years, the penetration is going to grow and reach like 70, 80, 90%. Then you can take advantage of those sectors of those industries where penetration is increasing, because new users are getting added. After that point of time, penetration will not increase, growth will stall. All right. Now, you'll have a very logical follow-up question related to penetration, which is, if so many products that we actually use in our daily lives have very high penetration, right? Let's say toothpaste is there and so many other products are also there. Let's say shampoo is there, all these products are there. Let's say they have very high penetration these days. How are they able to grow now? How can the companies or how can the sector grow? Is there any other way also for the sector or the company to grow? Because now they've reached like almost like 100% of the users in India, right? No new users will be getting added. Then the name of the game actually changes, right? The game then becomes premiumization, right? Which is, if the industry before was actually selling low value products, now they are shifting towards high value products, right? 20 years ago, was there any Sensodyne in the market? No. Sensodyne got launched because Sensodyne is a premium product. So if all the users are already having toothpaste, how do you grow revenue? By selling a more expensive product to the same user base. Right? So your units sold might not be increasing, but your revenue will start going up. Right? Your revenue will start going up. Right? And same thing happens across so many FMCG products. We actually have a detailed slide ahead also on premiumization. I'll be talking about that, right? So if penetration is already hitting 90%, 95%, so then all the companies in that sector start to focus on premiumization. Launching high value products and selling those products to the customer. Right? And within that, there might be specific companies in that sector which are taking benefit of premiumization better than anyone else, better than the competition. And those can be, let's say, our bet also. Who is actually utilizing premiumization better, right? Because penetration is already 90%, 95%. All right. That's the first way. How fish gets bigger with the pond, or how the sector grows. Right? The second way is end user industry growth. What does this mean? This specifically applies to B2B industries. Right? B2B industries, right? End user industry means, if you are making a product which is very valuable to, let's say, the auto industry. Let us say I am making any product which is very valuable to auto industry. B2B means business to business. I make a product and I sell to another business. I do not sell to a direct customer. I sell to a business. Let's say I make tires. Let's assume I make tires and I sell those tires to Tata Motors. So Tata Motors is a business and I do B2B, business to business, right? Now, Tata Motors, or let's say the car industry, the car sector, four-wheeler sector becomes my end user industry. end user industry. Now, is it very fair to assume that when the auto industry grows, the demand for tires will also increase, because more and more cars will be manufactured, more and more tires will be required, and that will lead to my growth as well. This is what I mean by end user industry growth. Another example could be a very popular example that I cite always to my students is the aliphatic amine industry. Aliphatic amines industry, right? Now, aliphatic amines are a very essential product which is used in the pharmas for pharma companies, for pharma industry, right? All pharma companies use aliphatic amines, right? Now, there are only two companies in India which manufacture aliphatic amines, which is alkyl amine and Balaji amines. Alkyl amines and Balaji amines. Whenever the pharma industry grows really well, there is a direct benefit passed on to the amine industry, and the amine industry also starts booming. And I'll tell you interestingly, many a times, the industry, the first industry which is growing, actually the B2C industry which is growing, you may not be able to find very interesting companies there. But on the supplier side, you'll actually find very interesting companies. And I'll tell you the reason also, right? Let us say pharma. Let's say pharma, right? Pharma may, or let's say the generic pharma, in the generic pharma industry, now there is so much competition. And in India, hardly anyone does research. Right, on the pharma side. So there's so much competition. Because of competition, all companies in the pharma sector have very thin margins. They make very, very thin margins. Though the pharma industry might be growing really well, but because each one in the pharma industry, whoever is manufacturing medicines, is not making any margins, so they are not going to be the beneficiary of that growth. Right? The beneficiary might actually be someone else who is supplying aliphatic amines to this entire pharma industry. And because there are only two guys sitting there, alkyl amines and Balaji amines, they make huge margins on whatever amines they sell. Right? So it's very interesting. Pharma industry is driving the growth of amine industry, but in pharma industry, you might not be able to find any interesting company. In amine industry, you may find a very interesting company. All right. Is it very, very clear? End user industry growth? Yes, no in the chat. Awesome. End user industry growth is clear. All right. Now the third part is value migration inter-industry or internationally, right? Value migration is a concept which I've explained in the masterclass also. I'll just give a very brief definition here because I have a concept ahead also to cover I'll cover value migration in detail as well, right? So value migration only means shifting of demand from one set of companies to a newer set of companies. Simple. Shifting of demand from one set of companies to a newer set of companies. Now, how can a sector, the entire sector, benefit from value migration? How can an entire sector benefit from value migration? Because value migration also happens inter-industry or internationally. Just give me a second. I'm coming back. Awesome. So let me actually make Akshit co-host. 1 second. So Akshit is from the team. Ritvik could not join today. 1 second. Yeah, Akshit is the co-host now. Okay, fair enough. Now I was explaining value migration, right? Now how can a sector benefit from value migration, right? How can a sector grow with value migration, right? When sector happens, when value migration happens either inter-industry or internationally. Now, what are the examples here? What are the examples here? The number of passengers that railways had 15 years ago, was much higher, or is much higher than the number of passengers that railways has today. Now, where did the demand go? Where did the customers go? Please answer in the chat. Where did the railway customers go? Flights. Yes. So railways had value migration towards airlines. Right. So this is an example of value migration happening from one entire industry to a newer industry. Railways to, let's say, airlines. Railways to airlines. Right. It can also happen internationally. How? Let's say the Indian IT sector is a prime example, right? Value migration happening internationally from all across the world, primarily US and Europe, towards India. Because of that, the Indian IT sector became really big. Really big. Right? So this is an example of value migration. Now, because of three reasons, either penetration, premiumization. Now, penetration and premiumization is specifically valid in consumer-facing companies, right? End user industry growth, specifically valid in B2B companies, right? Business-to-business companies. And value migration, there are only few examples of value migration inter-industry or internationally, but that's also there, right? Because of these three reasons, the sector becomes bigger. And when the sector becomes bigger, all the fishes or all the companies in that sector become big. When the pond becomes big, all the fishes in that pond become big. All right. What is the second way? The second way how a company can become big, how a fish can become big, is by eating away smaller fishes. The pond is not getting bigger. The fish is eating smaller fishes and becoming bigger. Classic example of market share increasing. Right? So in your head, you would have to separate these three divisions, right? So the third division is also coming, right? The third way is also coming, how a company can grow, right? The first way was sector is becoming bigger, because of that company is becoming bigger. The second way is sector is not becoming bigger, but the company is becoming bigger by eating away market share, right? Now, how can this happen? You eat away the entire supply or the demand. Right? Now, how do you eat away the demand? Eating away demand is actually simpler, because all of you would understand that if you do very aggressive, let's say, marketing, aggressive branding, then you convert customers of other companies to customers of yourself. Right? You actually convert all those other customers that were customers of other companies to your customers, right? Now, good examples come to our mind, which is let's say Asian Paints. Right? Now, Asian Paints. How did they eat away the demand? One, of course, they can run all marketing, branding, etc. on TV commercials, etc. But the prime reason how they were able to eat away the demand was because of their footprint. Right? Now, Asian Paints is having the largest network of retail shops where the paint is sold, right? Compared to any other paints company in the world. They have the largest number of retail selling of, let's say, paints across the world. In fact, they are almost 3 times as big as Berger Paints. The number of shops are actually 3 times bigger than Berger Paints. Right? So they continue to actually increase their footprint. With that footprint, what happens is, in each of the areas where you're expanding your footprint, you will eat away demand. Right? Another very interesting example I'll tell you. There's a cement company There's a cement company which is called, the name is Shri Cements. Shri Cements. Shri Cements, right? Now cement, all the big cement companies, no, in India, in around 2007 or 2008, they used to follow a very simple business model. That simple business model was, you will have some centralized manufacturing factory, maybe in Delhi, in Madhya Pradesh, wherever, and you used to, let's say, send cement which is manufactured there into different parts of India. Now in 2007, 2008, because of this business model, there was advantage given to local suppliers or local manufacturers. Why was that? Cement is a bulky item to transport. It's a bulky item to transport. It's a heavy item to transport. So the logistics cost was very, very high, was extremely high for all these big companies, Ambuja, ACC, etc., even Ultratech, Shri Cements, etc., everyone, for all these companies, logistics cost was very, very high because they had a centralized model. Right? They used to manufacture and they used to send the cements everywhere, right? Now Shri Cements was the one which actually innovated on the hub and spoke model, where what they did was they actually launched local manufacturing plants as well. In each state of India. And try to displace the local player from there. So before 2007-8, there were local players in, let's say, Punjab, local players in, let's say, in and around each city. There were local players who were selling like tons and tons of cements. Right? Now, what Shri Cements did was they actually started this model, which was localized manufacturing. Because of that, they started eating away demand from the local players. And in 2007 to 2000, let's say 14 or 15, you'll be surprised. I can give you data. They increased their capacity by 50 times. 50 times they increased their capacity in 7 years. 7 years, they increased their capacity by 50 times. Right? And they had hell of a run in the stock market. Right? By the time everyone else also started copying that model, now everyone else has copied the model. But at that point of time, they were the only ones who were doing it, and they were the only ones who were eating away the demand, who were eating away the market share of all the local players. They benefited a lot from that, right? Now, there can also be examples of eating away supply. Mostly it happens in platform kind of businesses, right? Marketplace kind of businesses. Let us say there's a business called, let's say, Cars 24. Cars 24 is a platform, right, where you can actually buy used cars and you can also sell used cars, right? Now, a very easy way to, let's say, keep growing for Cars 24 is to keep growing on the supply side. You have to keep eating away the supply side, right? You have to keep eating away the supply side, which is you have to keep buying. So Cars 24 has to keep buying used cars from people. And if they continue to do that in like all the major cities and have like control like 70 to 80% of used cars in Mumbai, Delhi, Bangalore, Gurgaon, then definitely that means that 70 to 80% of the demand from all these cities is going to Cars 24. Because all the used cars are anyway with Cars 24. Right? So you can eat away all the supply on the supply side, and the demand will definitely come to you. So you ate away all the local players there, the local, let's say, operators there. All right. So that's eating away supply or eating away demand. Right. Another example which comes to my mind right now is Fevicol, right? So Pidilite is the parent company of Fevicol, right? Now they had a very interesting strategy to eat away demand, right? Now Fevicol is an adhesive, right? It's an adhesive. Now, where do people use adhesive? Where do people use most of the adhesive? Or let's say, when is the maximum use of adhesives? Interiors, furnitures. Correct, furnitures. furnitures, right? Now, read about that on the internet, all right? So Fevicol or Pidilite, in the last 10 years, they are known to provide training to almost 50,000 to 1 lakh carpenters every year. They provide free training to upskill all these carpenters every year. Why do they do that? Because carpenters are the one who actually drive the demand for Fevicol. Right? So they create a very strong brand presence among carpenters because of like free upskilling training that they provide to them. Right? So when carpenters actually make furniture, etc., wherever, they only and only recommend Fevicol to their clients and they only buy Fevicol. It's not a different kind of product. It's not a patent that they have, right? There can be so many adhesive companies also in India, but there's only one that you know, and that's the largest. It has like 60 to 70% of the market share, I suppose, because of their very aggressive demand generation or let's say brand building activities that they do. Right? They are even doing premiumization with their products. Yes, they are doing premiumization with the launch of let's say Fevikwik, etc. Right? It's a premium product. Okay. Second is very, very easy to understand, very simple to understand. Value migration within the industry because of any inflection point, because of any factor. Value migration could happen within the industry. Within the industry, the market share, the demand could actually shift from one set of companies to a newer set of companies. One set of companies to a newer set of companies, right? Happened in banking, happened in so many other sectors also, right? In two-wheelers, I gave an example to you that day, and we'll also be talking about it in detail coming ahead when we talk in detail about value migration. Okay. Third is consolidation in the industry. Consolidation in the industry. Now I've kept it separately. Because some level of consolidation also happens when the company is consciously eating away supply or consciously eating away demand. But some level of consolidation can also happen organically. Now, how does that happen? When weaker players or smaller fishes automatically die. Right? Let's say, even before Jio came in, the only two prominent players in telecom were Airtel and Vodafone. And it is not that Airtel and Vodafone actually ate away the supply or ate away the demand of the telecom industry. The primary reason these were the only two left was telecom industry is very difficult to operate in. You cannot operate in telecom industry and you cannot win telecom industry if you do not have like unlimited cash sitting with you. Right? Now, because of that constraint, smaller companies automatically shut down. Because smaller companies shut down, all the demand that these smaller companies had moved away from smaller companies to let's say Vodafone, Airtel, etc. and now Jio. Right? So there can be let's say examples where automatically, because the industry is really tough, consolidation is happening in that industry. And the advantage clearly goes to the stronger player or let's say the leader in that industry. All right. Amazing. Is this very, very clear? How market share can be gained, and even when the pool is not growing, even when the pond is not growing, fish can still become bigger by eating away smaller fishes. Very clear. Awesome. Okay, Santosh says yes, sir. Badhiya. Now, before moving to the third step, just want to mention here that in real life, what happens is there can be a combination of the first way of growth and the second way of growth, which means the sector is also expanding. Let us say the sector is expanding at 10%. Right? Which means as per our criteria, 10% is not as exciting growth that we are looking at. But let's say if in the sector which is growing at 10%, market share shifting is also happening. Right? Which means the company which is gaining from market share shift, we can take a bet there, because that might be growing at like 20-25%. Sector is growing at 10%, but because that company is also eating away market share, right? So if it does not eat any market share, it's growing at 10%. But if it eats market share, the growth will be even faster, even better. Right? So the company might be growing at 20-25%, right? Awesome. It can be a combination, right? Now the third way and the last way how, let's say, a company can grow in relation with the sector is by let's say getting into newer sectors or newer domains. By getting into newer sectors or newer domains, right? No one actually stops a company to be in that pond, to be in that sector, right? The fish can put offsprings in different ponds, or the fish can also enter into a different pond. The fish can put offsprings into different ponds. That's the third way. That's the third way, right? Shashank says our merger acquisitions are part of it. Eating away supply demand is actually an example of merger acquisition. If you acquire a company, you eat away that demand as well, whatever the company has. The fish puts offsprings in different ponds, right? That's the third way how a company can grow in relation with the sector, right? Now there are three ways. There are three ways this can happen. Three ways that this can happen, right? The first way is very, very simple. It's geographical expansion. Geographical expansion, right? Any one of you has heard of diamond chips? Diamond chips, diamond namkeen. सुना है क्या किसी ने? किसी ने खाया भी है? Yes, diamond chips. So diamond chips, the parent company name is Pratap Snacks. Pratap Snacks, right? Now they are very prominent. They are very prominent in northern part of India, northern and western part of India, mostly northern and western part of India, right? Now a very logical way for them to grow is to increase their geographical footprint, which is because they are only currently present in northern and western part of India, they can now expand into southern part of India, or let's say eastern part of India. They can now expand into, let's say, southern states and let's say Bengal, eastern part of India, Seven Sisters, etc. Right? So you can do geographical expansion. You can do geographical expansion, and there could be like so many other examples also. There are so many NBFCs which started off as a local NBFC, right? A very prime example is, let's say, Muthoot Finance. Muthoot Finance, right? Now, Muthoot Finance specifically was a south-based, southern state-based, or southern state-focused NBFC. Now they've expanded their reach all across India. So geographical expansion, right? That's one way, right? Second way can be new product or market launch. New product or market launch. And in some sense, in some examples, what happens is if you launch a new product, that product becomes a new market. Right? I'll give you an example. Right? So let's say, first I'll give you examples of newer product launch or newer category launch, right? ITC. Now, ITC is the most prominent player or the biggest player in the cigarette segment, in the cigarette sector. Okay. People are asking NBFC kya hota hai? NBFC question mark. NBFCs are non-banking financial company, right? They also are in the business of giving loans to people. All right. So ITC. So ITC, let's say they are the most prominent player in the cigarette segment, in the cigarette sector, right? Now they have almost 98-99% market share of the cigarette sector, right? And the cigarette sector is also not growing. It's not growing, right? Which means whatever sales they were doing before, the same kind of sales they are doing today also. Like whatever sales they were doing in the cigarette segment 3 years ago, almost the same kind of sales they are doing today also, right? Because they can also not do premiumization. In fact, premiumization here is done by the government of India. They keep putting more and more taxes on cigarette. The cigarettes keep becoming more and more expensive, but ITC does not earn anything out of it, right? So the only way where ITC can actually get growth, get growth is to enter into newer categories. To enter into newer categories. That is where they took a bet almost like 7-8 years ago. It's been 10 years now. They took a bet to enter into FMCG. They took a bet to enter into hotels, etc., stationery, etc., etc., etc. Right? So they entered into a newer market and by launching a newer product. Right? Same way also happened with Reliance. They are also diversifying now. Right? Because they realize that maybe so almost 80 to 90% of their revenue some 3 years back was only coming from petroleum refinery business, right? Now, because the world is anyway moving away from hydrocarbons and moving into like green energy, they also had to start looking at other segments, other sectors where they can actually continue to have growth in the future as well, right? Which is where they realize that technology, telecom, etc., can be a big play, and that's where the investment into Geo, right? Now, in some cases, it can also be a new market launch, which means by launching a product, you actually you introduce a new sector, you introduce a new segment itself, right? For example, let's say Apple smartphone. Now I think 4 to 5 years back, 6 years back, they launched the AirPod, right, which is the wireless earphone, right? Now, AirPod in itself is a new segment now. It's a brand new sector or a new market that they have launched. It was not existing before. So it can happen that with a new product, you actually create a new market and you're dominating that market, right? So that's one way where you can have, let's say, the fish can actually put offsprings in different ponds. Right? Even with iPod, yeah. So with iPod, with let's say smartphone, with iPhone, and with AirPod, they have been launching newer and newer domains, newer sectors also, right? And third, I've kept specifically separately from geographical expansion and new product launch. That is capturing value across value chain. Now, this, of course, it has some intersection with newer product launches or getting into newer categories, but it has other benefits also, which is the benefit of cost advantage. I'll be also explaining value chain in detail going ahead, right? So value chain is nothing but whatever steps are involved in manufacturing or let's say making of the final good or the final service, all those companies are part of the value chain. And I told you in the masterclass as well that if you, let's say, expand across the value chain, if you do forward integration or you do backward integration, then you get cost advantage as well. The example that I gave was Maruti Suzuki getting into manufacturing of batteries, right? So they not only get cost advantage, but think about it. They can also sell these batteries to other car manufacturers, right? So they also get growth from the battery sector. Plus they get cost advantage for themselves. So that's capturing value across value chain. Tata is a very prime example of this. So all like Tata companies, Tata Motors is there, Tata Power is there, Tata Chemicals is there, Tata Steel is there, etc., etc. They are not only providers of that product to each other, but they also sell that product to others, right? So Tata Steel does not only sell steel to Tata Motors, but they also sell steel to so many other companies, right? So they benefit from the steel industry growth, and they also benefit from cost advantage to Tata Motors. All right, great. Okay. Is this very, very clear? There are only 3 ways. Fish gets bigger with the pond. Sector gets bigger, fish gets bigger. Then fish gets bigger by eating smaller fishes. And then fish puts offsprings in different ponds. Okay, I've used like simple analogies so that you can remember it for long. All right. Any questions till now? Awesome. Okay. Now there are three questions. There are three questions that we should be asking. Three questions that we should be asking whenever we have picked up any sector. Whenever we have picked up any sector for understanding that sector, for understanding that industry, there are three questions that we should be asking, right? First is the pond getting bigger? Is the pond getting bigger? What is the sector growth and what is the market opportunity? That's the top level understanding. I'll also give you the list of questions. Right? Then we should do a deep dive into value migration, and then we should understand the value chain analysis, right? So this, I already gave you an explanation yesterday, right? This is the macro level understanding of India's economy, right? I'll not maybe repeat this again. This will eat away my time, right? I'll just repeat very quickly. So India's economy is growing very, very quickly. Almost having a GDP growth of 8 to 10% in the next 10 to 12 years. Overall, the India's economy itself is growing at 8 to 10%. And within that, there will be so many sectors. There will be so many sectors which will be growing at more than 8 to 10% also. Also, there will be so many sectors which will be growing at less than 8 to 10%, right? And of course, because we are looking to do smart investments, we'll be interested in sectors which are growing at more than 8 to 10%, right? So overall, the economy is growing at 8 to 10%, right? And the per capita income of India is also increasing. Very good signs, because per capita income increases, spending increases, and once we hit the threshold, then all the sectors start getting benefit out of it, right? And there are also some sectors where growth has not happened in the past, where growth will continue to happen or will happen in the future. Prime example being manufacturing, right? Awesome. Okay. Now, these are the four questions that we should be asking, right? These are the four questions that we should be asking. How big is the market? How big is the market today? How big is the market today? How many billion, how many million is the market today? Second question, how fast is it growing in terms of percentage, annual growth rate? How fast is it growing? How fast is it growing? Third, how much is the penetration? Let us say a sector is growing at 20% on an average annually. Sector is growing at 20% annually, but the penetration is already close to 85%. Are you interested in that sector? Yes or no? 85% penetration पहुंच चुका है और 20% से grow कर रहा है. No. Why? Because if you grow with 20% and the penetration is already 85%, that means in the next 3 years, you are already close to, let's say, 90 and 99%. In the next 2 to 3 years, which means in the next 2 3 years, you will have benefit, but after that, you will not have any benefit. You'll actually have to look for other growth avenues, right? So not very interesting. If the sector is growing at only 2% every year, overall sector, it's a very big sector. It's like a $1.5 trillion sector, but the sector is growing at only 2%. Is it interesting for you? Is it interesting for you? Yes, no? No, it's not interesting. What we seek is high growth, right? So sector has to grow fast. Right? And fourth, let's say once we understand how much is the penetration, we should also ask, is there any scope for premium value or not? Is there any scope from premiumization or not, right? Then how do we do research? So after this class, I'll be sharing a Google Sheet with you. Where for each of the sectors, I have given the links to specific research websites where you can go to these websites, understand about that sector, and get to have whatever data is required, right? So I'll be giving you a list of that, right? For chemical, what do you need to do? For banking, what do you need to do? For, let's say, manufacturing, what do you need to do, right? I'll also be giving examples, right? Prateek says, please explain 20% growth and penetration. All right, I'll explain again. Let's say sector currently, or let's say in the last 3 years, have been growing at 20%. Every year, right? The penetration of the industry currently is 85%, which means overall market size, whatever users are there, whatever customers can be acquired, out of those 85% are already acquired. So within the next 2-3 years, if I continue to grow at 20%, I will hit the ceiling of 100% penetration. After 2-3 years, there'll be no new users to acquire. No new users to acquire, which is why it's not a very interesting industry for us. Prateek says how? What do you mean by how? Is there any like specific question, specific doubt that you have? Can I unmute you? You can ask the question. Anji Prateek ji.
Sir, I was saying like 20% was the growth rate, right? And 85% is the current market penetration. Market has been penetrated 85%, right?
85%, yes.
So like how you calculated like in 2-3 years it would be like 100%.
85% को 20% पे grow करेंगे तो next year कितना grow करेगा? So two things can happen. One is within 1 year it actually hits 100%, or the growth has to slow down. The growth has to slow down. It cannot continue at 20%. Right? It's not feasible.
Correct.
Because 20%.
I was like how this number came like 2-3 years like.
Okay, mathematics was not clear.
Correct,
So either the growth will slow down. Initially it was growing at 20%, but now it might grow at like 5% because the penetration is very, very high.
Or if we have to draw a number on this, then which formula, or like is there anything else like we can derive from it?
No, so there's no formula. There's no formula for this. This is a very logical approach that you have to take. That 85% of the market has already been penetrated. Right? Which means the growth that this industry was having before, it's already in the final stage now. It's already in the final stage, which means the growth has to slow down. I showed you that chart also, no?
Correct.
वो maturity में चला गया.
नहीं, I was like shocked by the number. Like, have you used any kind of formula over there?
No.
Like,
so, need not be
that
like,
I can get it.
So I just maybe add to this. Most of investing, right? Whatever analysis you do, whatever research you do, most of investing does not require you to do perfect calculation.
Okay.
Does not require you to do perfect calculation.
Okay.
You would have to understand ballparks, and you would have to have clear, let's say, understanding of where the number will reach, right? So let's say when I'm doing startup investing also, I like do a very rough calculation. That this is how the market is, this is how big the market is, this is how it is growing, and most of the times I'm not correct, but I am borderline correct.
Okay.
Right? I need not be accurately correct, perfectly correct. Right? I can have a 5%, 10% margin. That's all right.
Okay.
Okay. Fair enough.
And sir, may I ask like what kind of account, like which demat account, like with Zerodha or any kind of like specific do you use for investing or?
So demat account do you use?
Yeah, I use demat account with like 3 or 4 people, right?
I use Zerodha. So you can use any broker.
Sure.
All these brokers.
Which particular broker I was asking?
So specifically for investing, you need not have a very hi-fi funda broker account, right? You can use any. There are so many which are available on mobile also these days, right? There's Grow, there's Upstocks, there's Zerodha. Because we need not do technical analysis, right? We need not study charts. We anyway have to like buy once and then forget about it, or let's say invest for the long term. Awesome. Thank you. How we can say if a market is 85% penetrated? Is there any website for where you check this? Yes. So that's where I'm giving this all these research options also, right? All these research options are also there, right? So industry reports you can download from all these sources. CRISIL is a credit rating company, right? They publish reports on various different kind of sectors. In fact, I showed you a report yesterday from CRISIL, right? Which was CRISIL report in the chemical sector, which actually taught me that the labor cost in India now is almost half or less than half that of China. And that knowledge, that information really benefited me, right? Then there are banking report, or specifically the financial industry report published by RBI. There are reports published by TRAI, which is the Telecom Regulatory Authority of India. They publish on telecom. Then IBEF, that's also a multidisciplinary or multi-industry report website. IRDAI is the Insurance Regulatory Development Authority of India. they publish reports on the insurance segment, insurance industry. AMFI is for mutual funds. CII is again multi-industry. World Bank is specifically, they also publish multi sectors, but specifically for the finance sector. Right? Now these are industry reports, right? Now Anita ma'am says these are 200 pages. So how do we read, right? That's why I told you specific questions that need to be answered from each sector. I'm not saying just like go ahead and then start reading these 200 pages. We need to get answers to these specific questions first, right? And then if you still have time, if you have interest in, let's say, reading the report, if you have interest in, let's say, understanding the sector, you can do that as well, right? But minimum, you should get the information of how big is the market currently, how fast is it growing, how much is the penetration, and scope for premium value is there or not. Many a times, scope for premium value data you will not get. This is from your personal understanding of that sector. Your personal understanding of that sector, whether premium products can be launched there or not, right? Is there any resource, just Karan Singh is asking, is there any resource which is combining all these research and giving a final report of a company or industry? No. No. So then you will ask at the end of the bootcamp, is there any person who can tell me which are the companies I will blindly trust him? Right? So it all boils down to that. So you have to do some hard work. Because all these industry reports are scattered, right? If you start spending half an hour to 45 minutes every week, that too on the weekends, I assure you within 6 months, 8 months time, you will be a superb investor. But the problem is most of the people will not even spend that half an hour. That's the problem, right? So you have to start somewhere. Start spending that half an hour every weekend. And within this bootcamp, I'll ensure that you start reading, right? So there'll be an assignment also coming for you today that you have to complete on sector analysis, right? So for that, you have to read, all right? Awesome. Then second, how do you do research? Company annual reports and DRHP. So the spelling is incorrect here. DRHP, it should be DRHP, draft red herring prospectus, right? Now, company annual report is the report published by each listed company every year. They also will give some understanding of the sector, but we don't have to rely too much on it because they will always give a rosy picture of the sector. They'll always give a good picture about the sector, right? Better than company annual reports might be DRHP because this is very extensive report published. Now, what is DRHP? When is it published? Whenever a company is in the procedure of raising an IPO or doing an IPO, right? IPO is initial public offering. The first time when a company is getting listed on stock market, they have to do IPO, right? In the future classes, I'll also be talking maybe 15-20 minutes about IPO process and how you can take benefit of that. All right. So whenever a company is listed, for first time getting listed on the stock market, they do an IPO. Before launching the IPO, they have to submit a DRHP, draft red herring prospectus, to the stock exchange, to SEBI, Securities Exchange Board of India, SEBI, right? And that document is publicly available. You can download it directly from SEBI's website, from BSE website, etc. Right? And this DRHP, I'll tell you, okay, I'll spend maybe 2 minutes on the process of IPO also, right? So how does the process of IPO happen, right? So let's say I've started a company, right? In the initial few years, I'll require some capital to grow my company. In the initial few years, I will get capital from VCs, from angel investors, etc., from PEs, etc., right? They will actually pump money into me. But after a certain amount of years, PEs or VCs will not be able to fund you because you might require like thousands of crores to actually fund growth into the future, right? For that, what you do is you decide to go public, which means you decide to raise money from many retail investors, many crore retail investors, right? For that, what you do is you do an IPO, initial public offering. So what you say is, I will actually sell, let's say 10% of my company or 10% shares of my company to the retail investors, to the public, right? There is a IPO size also decided. IPO size also decided, which is mostly calculated by the need of the company. Let us say Zomato needs 5,000 crore rupees to fuel growth for the next 5 years. So that 5,000 crores is the IPO size. They'll say, I am doing an IPO of 5,000 crores. I'm taking an example, right? 5,000 crores, right? Now, there can be like multiple scenarios happen. Let's say they launch an IPO and people do not subscribe for it. People don't subscribe for it, right? What happens? Then the IPO will fail, right? The number of subscribers are less, right? So Zomato will not be able to raise the 5,000 crore which it requires, right? So one of the goal or one of the objective of Zomato, whichever company is doing an IPO, one of the objective, or let's say the primary objective, is to make the IPO successful. To make the IPO successful, which means company's objective is to get as many subscribers as possible. As many subscribers as possible, right? Now there are 2-3 different kind of things that you can do to increase subscription. Right? The first way is telling people about the growth story of Zomato. And telling the public about everything about the company, so that if they know about the company, they might be interested to invest. And that's where DRHP comes into play, right? In the DRHP, it's actually a pitch. Right? So startups also do pitch to, let's say, investors, right? Whenever they're raising money, DRHP is the pitch to, let's say, you guys, to retail investors, that, hey, this is all about the company. This is how we have been performing in the past. This is how our industry is growing. This is how our sector is growing. This is how the company is growing. These are the key people in the company. These are the key processes in the company. Everything related to the company, everything related to the sector, the industry is mentioned in that. It's a pitch, investor deck, or a pitch to retail investors, right? This is the first way, which is making a very nice pitch. The second and the third way is doing marketing of IPO, giving money to YouTubers so that they make more and more videos about, let's say, your IPO, etc. So all that happens, right? So I'm telling you the reality, right? YouTubers also take money. You should be knowing that. YouTubers take money to promote an IPO, all right? And there have been instances where these YouTubers were caught. Okay. So now this DRHP, the process of making this DRHP is actually outsourced. The process of making this pitch is outsourced to very hi-fi funda investment banks. The company does not make the pitch on its own, because it's a very crucial document, right? Because if the pitch goes wrong, there might be like very less subscribers. So Zomato, what they do is they actually say, hey, Goldman Sachs is there, which is like a very investment fund is there. Maybe Citibank is there. So they'll say all these investment bankers will actually make a DRHP for me. They will make a DRHP for me. They'll make a pitch for me. So they'll come, they'll study the company, they'll understand the processes. They'll also study the sector. And then they will publish the DRHP, right? So the DRHP of Zomato might be like made after like hours and hours of research, months and months of research done by Citibank people, by Goldman Sachs people. And all this research is available to you guys for free. Right? If, let's say, you would have to do a sector research on your own, you would have to spend like lakhs and lakhs of money. Or you would have to purchase, let's say, very expensive industry reports. There are also paid industry reports, by the way. There are websites which actually sell industry reports. And the price is normally like 10,000, 20,000, 50,000 rupees just to download that report. But this DRHP is free of cost to all of you. And all this research is done by very knowledgeable, very smart investment bankers, right? And they actually put it in a very simple words so that all of you can understand, right? So DRHP is a good way to get sector understanding, right? I highly recommend it that whenever, let's say, you are interested in any sector, at least download 2-3 DRHPs of any new IPOs in that sector. That'll give you so much information, right? Then there are also sector reports published by brokers. Sector reports published by brokers. Now you have to understand, how do brokers make money? Brokers are Motilal Oswal, ICICI Securities, Zerodha. They make money whenever a transaction happens, right? Okay. So their business is actually to grow their number of transactions. Simple. Grow the number of transactions. That is why they have people also who call you and say, I have a very good stock. Would you like to invest or not? Because if you invest, you will do a transaction and they'll earn some fees out, right? One of the ways to increase transactions also is to do like investor awareness or traders awareness, right? And they do that by publishing sector reports. So if investors are more knowledgeable, they actually know about sectors, they know about companies, then they might do an investment, they might do a transaction, and then that's how these companies can earn also, right? So they keep publishing these sector reports also. In terms of, let's say, the how accurate the information that you get from all these different reports, always rely on the first step first, which is getting industry reports from all the CRISIL, RBI, TRAI, IBF, which are centralized body reports that you are actually reading. They are not biased towards any business. So the first level understanding we should always get from all these centralized body reports, industry reports, right? Then you should try to get understanding from DRHPs, and then maybe go towards Motilal Oswal, ICICI Securities. If you're not getting any information from the above, then you can actually go to Motilal Oswal, ICICI Securities also. Most of the times what happens is, in reports published by Motilal Oswal, ICICI Securities, all these brokers, you will find redundant information, right? What happens is, they have also hired a very junior level analyst. They have hired a very junior level analyst. Let's say Motilal Oswal has hired a junior level analyst. Okay. He's getting paid whatever 20,000-30,000 every month. His job is to publish analysis report or sector report of, let's say, chemical sector. He has to publish 3 sector chemical sector reports every month, 3 or 4, whatever, right? Now, let's say I'm talking about Motilal Oswal analyst, right? Let's say ICICI Securities last month published that chemical sector is going to grow at 12%. Let's say ICICI Securities in February published a report saying that chemical sector is going to grow at 12%. Now, if Motilal Oswal analyst does some research and he says that no, the chemical sector might grow at 20%, there's a high chance that he'll get a beating from his boss. He'll say, no, this is not done, bro. You have done some bad mathematics, right? Because ICICI guy is saying 12%, you are saying 20%. So there's some calculation error. If he says that, yes, chemical sector is going to grow at 12.5%, then there's no question asked. There's no question asked, because ICICI also said 12, you are also saying 12.5, right? So most of the times, research done by brokers is useless, most of the times. But you can get a feeling, of what is happening in the sector by reading this report. If you're not getting any relevant information from anywhere else, which is DRHP, CRISIL, RBI, all these reports. All right, fair enough. I spent a lot of time in explaining these reports also. Okay. Now, how do we do research? Let's get started with that. Right? We'll do case studies here. We'll pick up various different sectors, various different industries, right? And I'll tell you how to do sector analysis as well. Which among CII, TRAI, CRISIL is more dependable? So CII, TRAI is specifically for telecom. So TRAI does not publish report of any other domain. CII and CRISIL both are dependable. It's not the question of like which is more dependable. Right? Awesome. Fair enough. Great. Now let's start talking about the banking sector first. Right? Nikhil Gupta says, can you name some paid report supplier? I'll give you the list of paid report suppliers also in the WhatsApp group. But see, most of the data you can also get for free if you spend some time searching for it. Right? You don't have to pay a lot to get these reports. Okay. Banking sector. Banking sector. All right. Now, what is the business of banks? What is the business of banks? Banks are in the business of buying and selling cash. They are in the business of buying and selling money. Simple. Right? They buy money and they sell money. Banks are in the business of buying and selling money. Money is the raw material. Money is the raw material there. All right. They buy money, which means they take deposits. They take deposits. When they buy money, they incur a cost. There's a cost to it. That cost is called as cost of deposits or cost of, let's say, buying. Right? So they buy money at 4%. They buy money at 4%. They sell money at 10%, 11%, which is the lending rate. Which is the lending rate. ठीक है, आगे लोन दे दिया, मैंने डिपॉजिट लिया और आगे लोन दे दिया. डिपॉजिट मैंने लिया, उसको 4% दिया, जब लोन दिया तो उसको उससे 10% ले लिया. Right? And I make margins in between. I make margins in between. Right? Now, how does a bank grow? How does a bank grow? Any bank. How does a bank grow? By actually taking more deposits, and specifically, more importantly, giving more loans. Giving more loans. So if let's say last year I had given loans of 100 crore rupees. If this year I've given loans of 120 crore, which means I had a 20% growth. 20% growth in the amount of loans I've given. That will roughly translate into 20% growth in my overall revenue and profits. Because it is a very simple business to understand. You buy money, you sell money. The more you are able to sell money, the more growth you will have. Right? Now, this is slightly old data because this report that I actually picked up was showing data till 2020. After that, it has actually started to pick up, right? So till 2019, the data is correct. After that, there have been extrapolations, right? Extrapolation that was done after the ILFS crisis, after the NPA crisis, right? You can see from 2016 to 2019, banking was growing at 3.57%. Bank credit grew at 3.5%. Banks loans, loan book, or the amount of loans that were given by all banks, the banking sector, that grew at 3.5%. So let's keep that number for now. Right? Though deposits actually grew at a much faster pace. Deposits grew at, let's say, 10 to 12%, but because the loans only grew by 3.5%, the overall sector will be driven by loans, right? If more loans are given, that's where business comes from. Right? So because loans grew at 3.5%, overall banking sector was growing at 3.5%. Right? How did I get this data? This data I got from a DRHP of a bank that did IPO in 2020. I forgot the name of the bank. It's a very small bank that did an IPO. 2020 mein did an IPO. Why is the calculation in dollars? Why is it not in rupee? See, it depends on what matrix you use, what, let's say, base metric that you use. Many IPOs, when they publish the DRHP, the numbers are actually in dollars. All right. Awesome. So the overall banking sector was growing at 3.5%. Now, is 3.5% interesting for us? Yes, no. Is it interesting? 3.5% se pura sector grow kar raha hai. No, it is not interesting, right? So let's deep dive. Let us see what is happening within the sector. All right. Let's zoom in. Now, second slide shows that in the year 2000, the market share in loans was only 79%, with public banks. In the year 2020, that number from 80% has reduced to 59.8% to 60%, let's say 60%. with public banks, and the private sector banking has been able to increase their market share, from 12% to 36%, from 12% to 36% in 20 years, right? Specifically, if you talk about, let's say, the credit growth, private banks have been having a credit growth of 11%, whereas public banks have been having a degrowth, which is declining, of 5%. So it became lesser by 5% in the last like 5 years, 2015 to 2020, right? So the average banking sector growth was around 3.5%. When we zoomed in, when we deep dived, we realized that banking sector is a part of two, let's say, players, two major type of players, right? The first one is the private sector banking, and the other one is the public banking, right? Public banks have been having a degrowth of 5%. Private banks have been having a growth of 11%, which is why the average that we see is close to like 2.5 to 3%, 3.5%. Got it? The average is around 3.5%, right? So though the overall banking sector was not looking very interesting to us, but now we realize that the public banking sector, the private banking sector, the private players are actually having a growth of 11%. Is 11% interesting for us? It's still like better than 3.5%. Is it interesting for us? Yes, no? Yes, it's slightly interesting, not that interesting, right? Very highly interesting will be like 20-25%. That's where we'll actually get in, right? Nikhil says, can you please explain 3.5%? So I've done mathematics of calculating from 2016 to 2019. They are not shown it here, but I've done that mathematics because this report was published in the end of 2019. And this is real data till 2019. After that, they have done extrapolation. This is not real data. 2020 to 2022, this is not real data. 2016 to 2019, this is real data. Right? After that, they did extrapolation, which I did not take into consideration. Right? The CAGR that is shown here, that is not correct. I have done calculation on my own and calculated 3.5%. All right. So 11% of private banks is better than 3.5%, but not that interesting. Not that interesting, right? Let's maybe study this even more. Right? So if you look at the left chart, red line is actually private banks, and the graph actually shows the year-on-year growth rate. The year-on-year growth rate of the private banking pie and the public banking sector, right? So the public banking sector have been having a degrowth. Many times it was having like a degrowth also of -2%, -5%, whatever. And private sector has always been like above 10%, above 15%, above hitting 20% also many years, right? So that has been the picture from 2015 to 2019. This is not my data. This is RBI data, right? Reserve Bank of India data. All right. On the right hand side, you see even more interesting data. What is that? NBFCs and HFCs, which were a very small part, almost a decade ago, has now expanded their market share a lot. In the private banking pie, specifically NBFCs and HFCs have been growing at close to 20 to 22%. In the last like 5 to 6 years. NBFCs and HFCs have been able to grow at 20 to 22%. Right? So what I did was, I started with the overall banking sector. Then because that was not very interesting, I started looking deep into, I did compartmentalization of private and public. Then private was looking interesting. It was growing at 11%. Then I went even deeper. Right? Then I said private banking is a combination of, let's say, bigger banks, then NBFCs, then HFCs. Specifically, NBFCs and HFCs have been growing at 20 to 22%. right? Now, what are NBFCs? What are HFCs? NBFCs are non-banking financing corporations, companies. HFCs are housing finance companies. Housing finance companies, which gives loan on, let's say, home loans, mortgage loans, etc., etc. Specifically housing, only housing. Housing finance companies and NBFCs have been able to grow much faster. In fact, within NBFCs also, niche specific NBFCs. Niche specific NBFCs means NBFCs which pick up a particular niche and try to only and only target that, which is, let's say, gold loans, which is, let's say, two-wheeler loans, right? So all these NBFCs which focus on a particular niche and try to, let's say, only go deep into that niche, they had tremendous growth. Example, prime example is Bajaj Finance. They specifically scaled on consumer finance, consumer durable finance, right? They nailed the EMI market in India. Muthoot Finance, Manappuram is again another example of gold loans. They have been having tremendous growth. Even HFCs examples are Avas. Example is Aptus Value. Right? All these companies have been able to grow tremendously because the entire NBFC and the HFC market is expanding at 20 to 22%. 20 से 22% grow कर रहा है. HDFC is not a HFC. HDFC is a bank now. Okay. Fair enough. Yeah, Krishna says Devan housing finance. Yeah. Tapan says, what may be the reason? What do you mean? What may be the reason? What is the reason why NBFCs and HFCs are growing faster? Because they have clear focus on one particular niche or one particular area. Right? They are specialists in giving one kind of loans or one ticket size of loans also. Right? See, when a bigger company is there, and this happens in almost all industries, when a bigger company is there, they have to focus on various different kind of customers. Right? An HDFC and an ICICI bank, they will actually have to focus on giving consumer loans, plus they have to focus on giving business loans, plus they have to focus on, let's say, giving gold loans, etc. They have to focus on giving credit cards. So, itni sari departments hai. There is no clear focus and there's no clear execution also. Right? When you are focused towards one particular niche, one particular domain, one type of customer, then you can grow really fast in that niche. Which fish pond concept NBFC growth falls in? So we are actually first understanding which pond is interesting. So we actually first focus on the mega pond, which was the banking sector. Then we go to the sub pond, which was private banking. Then we go to the sub pond, which was NBFCs and HFCs. Now, because this sub pond is growing at 20 to 22%, is 20 to 22% interesting enough for us? Is that interesting? Yes. Ashok says no. Why? 20% is interesting, sir. Because if the sub pond, if the subsector is growing at 20%, there will be some companies who will also be gaining, market share, and that company will be growing at around 27, 28% or 30%. Right? Because of market share shifting also happening. All right. And if a company is growing at 25, 26%, that means it is becoming 10 times in 10 years. 10 times in 10 years. But let us say it is not very interesting for you. Then let's deep dive even more. Or let's try to understand some trends in the banking sector as well. Let us try to understand some trends in the banking sector. Right? On the left-hand side, you see a chart, you see a graph which shows the growth of India's digital lending sector. Let me actually zoom in. I'm not so sure if I'm able to zoom in. No, I cannot zoom. I can't zoom. Okay. So on the left-hand side, you see the growth of India's digital lending. Now, what is digital lending? What is digital lending? Online distribution. Yes. So the distribution channel got disrupted, right? 5 years ago, or let's say 10 years ago, how were loans given? How was lending done? Lending was done in the offline world. Right? Which means there were banks, there were branches, etc. And then you had to go to a branch and then take a loan from them. Right? You have to submit documents, all these things you have to do, right? And then take a loan, right? Now, because of the advent of internet, everything happens online, and even loans are given online, which means there are now at least 500 different kind of mobile applications, right? There is early salary, there is early loan, there is Navi, there is so much. There's all these different kind of companies that are there, which are giving you loans in 5 minutes, and that too online. Right? So you get all these SMSs, so Mr. Manash Bhattacharya, you have got a pre-approved loan of 5 lakh rupees. Click here to claim, right? So you get all these SMSs, right? So that's called digital lending. Right? Now this digital lending has been growing tremendously, amazingly, right? You can see the growth also. Right? FY21, the overall digital lending market is $200 billion. FY23, fiscal year 23, that market becomes $350 billion. So in 2 years, it is close to doubling, right? It's doubling almost, like 2 to 2.5 years. 2 to 2.5 years, it's doubling. The overall market is doubling. Now I have a very simple question to you, right? If the market is doubling in 2.5 years, what is the growth rate of digital lending market? 2.5 years, it is doubling. 2.5 years, it is doubling. 2 to 2.5 years, it's doubling. Close to 30%. Close to 30 to 35%. Right? Close to 30%. Okay. 72 divided by 2.5, close to 30%. Right? The digital lending market is growing at 30%. 30%. Amazing growth it is having. Right? Now, how can we benefit? Out of it? Right? You have to remember the distribution is getting disrupted, right? So initially, banks, because they had the distribution sorted, which means they had the footprint all across India. So whenever someone wanted a loan, there was a branch nearby, or they had an account in that bank, so they used to go there. Now, because the distribution of loans got disrupted, I can now launch a new company. I can start providing loans to people directly. I can be here in Chandigarh and I can provide loans in, let's say, in Chennai, in Tamil Nadu, right? Through, let's say, internet. So distribution got disrupted, right? Who will benefit out of this? Right? I'll give you 2 things to remember in digital lending specifically, right? Number one, because all these mobile applications are coming, which are lending applications, these lending applications also have to be supported by an NBFC or a bank at the back end. These lending applications, they don't have their own money. They get money from somewhere, right? They get money to give as loans. Right? They get money from either NBFCs or banks at the back end, or they get their own NBFC license, which is very rare. But most of the times what happens is they actually create a distribution layer on top of the existing banks and existing NBFCs. Right? So let's say I start a new application, which is called, let's say, Loan Tap, right? So I started Loan Tap, and then I tied up with a bank called IDFC Bank. Let's say IDFC Bank will give me capital. It'll give me 200 crore rupees, and I will distribute this 100 crore rupees at, let's say, 15% interest rate on my application, on my mobile app, right? I will recover 15% from them, and maybe I'll pass 12% directly. I'll pass 12% directly to IDFC Bank. I will keep 3% as my commission. I'll keep 3% as my commission. Simple. I'll give 3% as my commission. Right? Now, what can we do with this information? Because digital lending is becoming so big, it's growing so big, we would have to have a keen eye on who are the banks, or which are the banks which are very, let's say, active, which are very active in participating in this fintech movement. In the fintech movement, right? Which are very active, or which are comfortable in tying up with smaller startups, smaller companies, right? So I'll give you some examples. HDFC Bank specifically, and I have personally met with their team also because of, let's say, a startup that was actually approaching me. HDFC Bank is a pain because they do not move anything. It's a big hathi now, right? It's a big hathi now. They do very good banking, but when it comes to partnerships, they are not very active in partnering with smaller companies or smaller startups or digital startups. ICICI banks are ICICI Bank is much better in partnering with, let's say, newer startups, newer companies, etc. So if you have to compare among like the larger banks, HDFC, ICICI, Kotak, Axis, ICICI is the most active one in participating, or let's say in tying up, in partnering with smaller companies, with startups, right? In terms of smaller banks, there is IDFC First Bank, and then there is RBL, etc., which are very amazing in tying up with companies. That's one criteria that you can look at, right? You can actually go to, let's say, you can make a list of digital startups. You can go to their website. When you go to the website, you'll also find partnerships, our partners. In the Our Partners tab, you can find which banks or which NBFCs have they tied up with. So you'll understand which banks are very, very active. Very active. Jyoti ma'am is asking, how about recovery? What do you mean by recovery? Oh, is digital lending safe, or are the NPAs very high? How does the recovery happen? So recovery also happens over online, over phone. See, it's still a new game. I know there have been some regulations coming in. Last year, there was some regulations on how recovery is done. Because these calling agents are not trained to handle properly. But the sector is definitely bound to grow. Digital lending growth will not stop. Growth will continue. That's for sure. Practices might improve. Some practices might improve. Some processes might improve. Growth will definitely happen, right? And similar story is the growth in credit to housing finances also. Almost like 20-25% you are growing there. All right, 20-25% you're growing there. Okay. All right. There is another benefit that I wanted to tell about digital lending. Another factor that I want to tell about digital lending, right? Now, digital lending, what they're doing is they're trying to disrupt distribution. Right? Now, all these consumer startups with very large user base, what they'll do now is they will also use their user base to actually give loans. Now, what do I mean by this? In India, Flipkart has a user base of around 25 crore. 25 crore user base is there with Flipkart. Amazon has a user base of around 18 crores. Swiggy has a user base of around 7 to 8 crores. Zomato, very, very similar, 9 to 10 crores. Now, it makes complete sense. To use this user base as a distribution channel for selling financial products. And they will definitely do it. All right. They'll not only provide loans to consumers, But because they are also a platform which is used by so many businesses, for example, let's say Swiggy, Zomato is used by so many restaurants, they will also be providing business loans or working capital loans to all these businesses. That's a proven model, and it gets so much funding in the VC circle also. Proven model that you actually create a user base and then you do lending on top of that. Proven model. All right. Cred also is doing the same. People have heard about Cred, right? So they first actually had the premium. They created a premium user base. They created a pool of, let's say, credit card users in India, and now they're entered into lending, right? There's a lot of news around Bharat Pay, Mr. Ashneer Grover, right? So Bharat Pay, they created a network of businesses, small businesses around India, by giving them a QR code or by giving them, let's say, a payment method, a method to collect payment from users, and they gave it for free, right? Just to acquire these businesses on their platform, right? And now, not now, almost like 2 years, it's been 2 years, they have now entered into lending, business loans for these businesses, and they're making good profit out of it, right? Now, this is another model which you have to take care of, which you have to like consider, right? Which is digital lending driven by these consumer startups. Now, let us say Flipkart has to go into lending. Right? Now, there are two ways how a company like Flipkart can go into lending. One way is they can tie up with an NBFC. They can negotiate with an NBFC. They can tie up with an NBFC, right? That's one way. The second way is a more popular way these days, is using something called as a NBFC as a license. NBFC as a license service from someone. NBFC as a license service from someone. Now, what does this mean? Let us say I took an NBFC license. I actually fulfilled all the criteria that is there with the regulatory. I got the NBFC license. Now, with the NBFC license, I'm not doing anything. I have now created a platform. Where I will tie up with companies. I'll provide APIs to them. Whenever there's a loan requirement at their end, they will hit the API. They will use my NBFC as a license, NBFC as a service, and they will give loans. And I'll actually make some commission out of it. And I can now tie up with many players. It is like saying what AWS does in cloud. They have a cloud, they have storage, and now they're providing cloud as a service to all these different companies. Similarly, there's NBFC as a service also, which is gaining popularity. Right? Now, the reason I mentioned this is there is a listed company which does this. The name of the company is Apollo Finvest. Note it down. Apollo Finvest. Right? It's a very simple business model. What they have is they had a NBFC license before, and what they have now done is they have created a platform, a tech platform. They've created APIs. They're actually they have exposed. They've made these APIs. They expose these APIs to, let's say, their partners. The partners actually use the NBFC as a license model to give loans. Many big consumer brands, Swiggy, I know, Flipkart, I know, Ola, I know, all these guys are actually using Apollo Finvest as an NBFC as a license. Right? So all the lending that's done by Flipkart actually goes through Apollo Finvest. I happen to know this because I also happen to know the founder of Apollo Finvest, the director of Apollo Finvest, Mr. Mikhil. I also have the corporate presentation of Apollo Finvest. I'll be sharing that in the group also. It'll give you a good understanding of how digital lending is shaping up. All right, it'll give you a good understanding of how digital lending as a sector is shaping up, right? And what Apollo Finvest does. Now, this is not a recommendation. Specifically, I want to mention here, this is not a recommendation for Apollo Finvest. All right, Apollo Finvest right now, it's still a very small company. still a very small company, and there's a concept of liquidity also. There's not much liquidity in the stock of Apollo Finvest. There's not much liquidity, right? So let's say अगर किसी हमारे में से किसी ने, let's say if you buy 1 crore worth of shares of Apollo Finvest, there's a chance that it might hit upper circuit because there's not much volume traded, right? So be careful there because of less volume, less liquidity. There are also, let's say, issues of some operators trying to, let's say, manipulate the prices there, right? But it's a very good company. It's a very good company. You should definitely study it for the sake of understanding digital lending really well, right? Yes, Ashok says high EPS growth company. Yes, I really like the company, and also I'm a friend of Nikhil. So it's a good company, but I would advise against investing. I won't advise investing in it because of very less volume, very less liquidity. There's a chance that your money will get stuck there, right? If you have very less volume, if you have very less capital, sorry, if you're thinking of only investing 1,000, 2,000 rupees, then you can do that. Then you can do that. If you have more capital, then you don't invest there. All right, great. Okay. Is banking very, very clear? Is banking very, very clear? Let's move ahead to the other sector. I've just done a very macro level overview of banking sector, right? So what are the steps to do? What are the steps to take? First of all, start with the overall sector. Overall sector, we will understand how big is the sector, how fast is it growing. If it's interesting, very, very good. If it's not interesting, don't stop there. Don't stop there. Deep dive, zero in. Try to understand what are the different trends that are playing in that sector, playing in that sector. What are the different subsectors, right? There might be higher growth in some subsectors, in some parts of that sector. All right. So you go into that and deep dive into that, and then you try to, let's say, find some companies within that, right? So if you have to pick up companies in the banking industry, in the banking sector, a good place to look at will be either NBFCs or HFCs or banks with a very strong presence or with a very strong tie-up with digital lending companies. All right, clear? Awesome, great. बढ़िया, आगे चलते हैं. It's already 8:58. I'll be covering like 3 to 4 sectors today, and then I'll be talking about value migration tomorrow. All right, great. The next industry, we'll stay in the finance sector for now. The next industry is insurance. Insurance again is an industry where money is the raw material. Right? In almost all of finance sector, money is the raw material. There is a reason why I'm actually repeating it again and again, right? Because when we do company analysis, I will tell you there are some different kind of metrics that we have to look at while looking at banking, insurance, AMCs. And I'll then repeat again, because money is the raw material there, I will not be looking at traditional metrics. I'll be looking at newer metrics. All right. That's why I'm repeating again, right? So insurance sector, very, very clear, right? Highly underpenetrated sector in India. Life insurance penetration in 2019 was only 2.8%. 2.8%. Srisha is asking what would be the logical way to further double click and zero in on a particular stock. That we'll cover in the company analysis part. Once we actually have a subsector, then we'll make a list of companies, we'll do comparison, and then we'll pick up the winning company from there. All right, that'll happen in the company analysis part. All right, awesome. Highly underpenetrated industry is the insurance sector. Life insurance penetration is 2.8%. Life insurance density in terms of dollars, that's the premium paid, or let's say the claim, sorry, the overall sum insured. That's only $58. That's only $58, right? If you compare that with, let's say, other advanced companies, not only in the West, but also in, let's say, in Asia, you'll see better numbers in Hong Kong, Singapore, Japan, Thailand, etc. Right? Even in China, the penetration is less, but the density is very, very high. Right? So India's insurable population estimated to be around 1 billion by 2035. 1 billion बन जाएगी. आज की डेट में अगर सिर्फ 2-3 करोड़ लोगों ने इंश्योरेंस ली हुई है, लाइफ इंश्योरेंस ली हुई है, in the next 15 years, that 2-3 crores that 2-3 crores will grow to become 100 crores. 100 crores. That's the insurable population. Not everyone will actually take the insurance among those also. That's the total addressable market. That's the total market. Okay. Now there's again some more data, which is urban working population is 172 million. Addressable market becomes 68 million. Now, how do we calculate addressable market? Addressable market will be, let's say, above a certain threshold of salary. So among the overall working population Janta, which is 17 crore, only 7 crore, let's say, have a salary of more than 3 lakhs per annum. Let's say more than 3 lakhs per annum. That's the total addressable market, excluding the blue collar workers, right? Among those, only 1.7 million annual policy sales are there. Only 1.7 million annual policy sales are there, right? So extremely less penetration, right? 1 out of 40 people who can afford it are buying a policy. 1 out of 40 people who can afford it are buying a policy, right? There's protection gap, and there's also trend of retail loans. Now, what are retail loans? Retail loans, how are these linked with insurance also? So whenever you're taking a loan, at that point of time, also there's a loan insurance. There's a loan insurance also, right? There's an insurance given to you along with loans. So because loans are also growing, insurance segment will also keep growing, right? There also has to be protection of the loan asset. There has to be protection of the loan asset, right? So this slide, these two slides are very, very clear, right? So it's a highly under-penetrated industry, right? We need not be specific with data, but we get a feeling कि बहुत कम penetration, right? Within that, of course, the sector will grow because penetration will increase. Within that, there is immense value migration or market share shifting happening. Very strong market share shifting happening. Very strong market share shifting. In 2003, that is the year, I think in 2002, private insurance companies were allowed to operate. By 2003, 98% of the market was controlled by public sector. And that too by only one company, which is LIC, Life Insurance Corporation, LIC, right? LIC. They had 98% of the market. 98% of the market. In the last 17 to 18 years, private companies have been able to increase their market share. By 33%, from 0% to 33%. LIC is now left with 66% power. 66% power. Right? Now, there are so much talks about the LIC IPO. It is the biggest IPO of all times, etc., etc., etc. Now that you understand how, let's say, how to do sector analysis, and now that I've told you that sector is growing, but also market share shift is happening, will you take a bet on LIC or will you take a bet on private insurance company? Will you take a bet on private insurance company, or will you take a bet on LIC? Very simple. The answer is very, very clear. Private insurance companies, because the reason is over the next decade, over the next 10 years, this market share shift will continue to happen. It will not stop. People will not start buying LIC because they are listed now, right? They will continue to shift from LIC to private insurance company, right? For example, I will never buy an insurance policy from LIC, right? Younger generation, or let's say when I get kids, my kids will grow up. My kids will never buy insurance from LIC. They will only and only buy from a private insurance company. So the market share of private will grow from 33 to maybe 66 in the next 10 years. Will double. And that too in a growing segment, in a growing sector. That sector is also growing really well. And within that, market share shift is also happening. Karan says, can we go for listing gains? I will talk about IPOs in later classes, and then I'll tell you, should you go for listing gains or not. Why not from LIC? Jyoti ma'am says, why not from LIC? You tell me, why do people buy insurance from private companies? Why do people buy insurance from private companies? Ease, customer service, processes, everything is better. Customer service is better. Digital approach, hassle-free, etc. Everything is better. Right? So you have to understand. Even in insurance sector, distribution is what got disrupted. And is getting disrupted even now. Right? By 2000, till let's say 2002, 2003, and even now, LICs, the LIC company, actually, they sold their policies. They sold insurance by their very strong agent network. I'm pretty sure that whoever is sitting in this class will at least know 2 LIC agents in their friends and family. Every one of you will know at least 2 LIC agents in your friends and family. So they had a very, very strong agent network. Through that agent network, they were able to sell a lot of insurance policies. Right? Now, when private companies were let's say allowed to come into or enter into insurance sector, the successful ones were those who already had the distribution sorted. Particularly, these were banks. Banks already had the distribution sorted. They already had the branch network. They already had footprint all across India. So through the footprint, they were now able to sell insurance policies also. So it's a very common saying that whenever you go to, let's say, any bank, the security guard से लेके cashier तक आपको हर कोई 2 चीजें बेच रहा होता है. एक तो क्रेडिट कार्ड और दूसरा इंश्योरेंस पॉलिसी. ठीक है, सिक्योरिटी गार्ड से लेके अंदर तक सब कोई आपको 2 चीजें बेच रहा होता है. ठीक है, इंश्योरेंस पॉलिसी एंड क्रेडिट कार्ड. Right? So because they had the distribution sorted, they were able to grow their market share. Right? Now again, this is getting disrupted. How? Because even in insurance, now distribution is supposed to happen online. And which is where Policy Bazaar, all these newer companies are also coming into picture. There's Ditto, there is Acco, there's Go Digit, etc., which are like primarily online first or online only, digital only insurance companies. So there's a company called Go Digit. I think Virat Kohli is their brand ambassador. So they only have online presence. That's it. They do not have any offline branch. They do not have any offline agent. They only sell online. Right? So even the private companies are actually facing a challenge there. Private, like established banks, are facing a challenge there. All right. So you'd have to see like which banks will actually continue having a strong moat in distribution. Okay. Awesome. Let's move ahead. Then if we stay in the financial sector, then comes AMC. Now, what is AMC? AMCs are asset management companies. Asset management companies. Right? Look at the CAGR. Look at the growth rate here. Right? I told you yesterday also, there's an important metric called AUM, assets under management, which is how many assets do they manage? How many assets, how much investments have they got from investors, right? How much money are they managing? And because their money, their profit, their revenue is directly dependent on assets under management, their profit is directly dependent on AUM. If we see the AUM growth, it is directly correlated with profit growth, business growth, right? AUM growth in the Indian mutual fund industry has been 23%. 23% from 2013 to 2018. 23% AUM growth. 23% AUM growth. Even after COVID, it actually jumped really, really well. It actually had a, I think, growth of 40 to 50%. 40 to 50%. Right? So, though mutual fund might not be a good way for you to put money into and then make growth, but if you invest in mutual fund companies, if you become part owner of mutual fund companies, then you can definitely benefit because mutual fund industry is growing very big. Mutual fund industry is really growing big. right? And even then, even there, you should understand which companies, which AMCs have the distribution sorted, have the distribution sorted to sell more and more. Distribution sorted to sell more and more. So like any other financial product, the number of branches, the number of footprint actually matters. That's where HDFC AMC has been like the leader there. SBI AMC and HDFC AMC has been the leader there. Because of the footprint, because of the network also. They're able to sell more and more. All right, amazing. Is finance sector very, very clear? I talked about banking, I talked about insurance, I talked about AMCs. Clear? कुछ समझ आया कि कैसे करना है analysis? Did you understand how to do analysis? Yes, card sector is very, very interesting. The consumer lending sector, the credit card sector is very interesting. I'll take an example of SBI cards. When we do the company analysis, when I teach you about banking sector, how do you analyze banking sector companies, then I'll also talk about SBI cards, and then I'll tell you about what is happening in the cards industry. Okay. Prateek Singh says, terminologies, please provide us a sheet. What do you mean? All the tough words that I'm using? You want definition of that? So I'll be sharing a sheet on resources. What are the resources? But terminology sheet I don't have. Any word that you are actually confused with, please you can ask me. AMC is asset management company. These are mutual fund companies. Just like SBI has a mutual fund, so SBI has that is controlled by SBI AMC, SBI Asset Management Company. HDFC also has an AMC, HDFC Asset Management Company, right? They are mutual fund companies. FMCG is fast moving consumer goods. Fast moving consumer goods. Can you share stepwise analysis sheet? Yes, I'll be sharing that on Saturday, Sunday, Monday, you have an off. I'll be sharing the sheet also with you of the flow chart that you have to follow in sector analysis, right? I'm done with the finance sector. I have FMCG sector coming ahead. Then I have the consumer durable sector coming ahead, right? QSR segment coming ahead. Then I have value migration. It's already 9:12. You guys decide, should I continue today or should I continue tomorrow? Please let me know in the chat. Okay, so tomorrow. People are already hungry. It's dinner time. Hungry, yeah, Satish says hungry. Very good. Sunil Serain says continue, please. So some people are actually saying tomorrow. Let's actually continue tomorrow. Let's continue tomorrow because tomorrow will be a revision also, quick revision of what we learned today. Right? If we continue on the same concept, it'll also be a quick revision of what we learned today. All right. I'll not take much time now in the sector analysis part. Tomorrow we'll actually be finishing sector analysis. By tomorrow end, we'll be finishing sector analysis. I have FMCG, etc. Then I have the value migration. Then I have value migration examples. Then I have value chain analysis, uske examples, etc. Right? Now, because I've not completed sector analysis, I'll not be giving you assignments. I'll not be giving you assignment because assignment actually is based on you learning the entire, or at least the FMCG sector also. There are some parts that you have to learn from there as well, right? So I'll not be giving assignment today. The homework that you had yesterday, that homework continues, right? So whoever did not read mental models, please read mental models. And also, if you can like quickly go through the PPT again. I'll be sharing the complete PPT, the entire PPT with you, even the things that will be covered tomorrow. So if you get time, you go through the PPT just to do a revision of what is covered today. Sultan sir says, I'm not so sure. Can you please change class timing from 5 p.m. to 7 p.m.? No, sir. Not possible for me and also not possible for many other participants as well. Okay. Any questions? Any questions for today? Any questions? Tomorrow we'll be starting with the FMCG sector. Gurpreet says no. Do other people have questions? Shashank has raised his hand, so I'm going to allow him to unmute. Vineet sir has also raised his hand. All right. So is there a holiday on 1 to 4? So there's holiday on 2nd, 3rd, and 4th of April, which is Saturday, Sunday, and Monday. Saturday, Sunday, Monday, there's a holiday. I believe I'll be giving you assignments, and there'll be a group project also. There'll be a group project also, which you guys have to complete over the weekend, right? And then we resume again on Tuesday to Friday. Next week also there'll be classes. Sarda sir says little bit about Policy Bazaar business analysis. When we do company analysis, no, I can take multiple examples there. So remind me of Policy Bazaar at that point. Could you please explain penetration and its calculation? Penetration is a number that you have to see or you have to study when you read reports, etc. It's not a number that you can calculate. Right? You cannot calculate that toothpaste has 80% penetration. You have to read reports, research reports on that sector, on that industry, and then you get that penetration. How to use different tools. All right, so I'll be giving a walkthrough of Screener, which is the most important tool that you need for fundamental analysis, right? I'll at least be spending half an hour to 1 hour when we do the company analysis part. Where to get research reports? Research reports, I will share a sheet with you, right? I'll also give links to different kind of research reports. You can go there, you can study there. It'll not be an exhaustive list, but it'll give you some idea where to get data from. Please repeat DRHP. DRHP is Draft Red Herring Prospectus. That is the document that IPO companies which are doing IPO, they publish or they submit to SEBI and SEBI publishes. That document has a lot of good insights, good data, relevant data about the sector, about the industry. So you can get a lot of information from DRHP. Would we be able to find stocks like Apollo Finvest? It's not Apollo FinTech, it's Apollo Finvest. All right, I'll just show you here. It's Apollo Finvest. All right, this is the company, Apollo Finvest. I'll just show you the website also. So Apollo Finvest is a tech company with an NBFC license. That's what I explained to you, right? Debt plus tech platform for fintechs to scale. We are the AWS of lending, right? Very simple. Shashank says, can you please unmute? Yes, please go ahead.
Akshay, just one query. Like we are understanding different sector from point of individual customers. Like let's say when you talked about insurance sector, how many individual consumers they are acquiring. We haven't seen any sector where groups are getting acquired. Like let's say for loans, like I'm working with Abbott, I have an employee base of 10,000 employees, and we all have group insurances. We also have loan facilities. So is there any specific reason we are only seeing business from point of individuals and not groups?
No, when I said the loan book of private banks or public banks or the overall banking sector is growing at 3.5%, 11%, that means the entire loan book. That does not specifically mean only consumer loans. There are different kind of loans also. When we do company analysis of banks, I'll explain there in detail what different kind of loans are there, what loans are good, what loans are bad. And if company focuses on consumer loan, is that company good? When company focuses on, let's say, business loans, is that company good? I'll be talking about that as well, right? When I talk about like the loan book growth, the lending growth, that means all different kind of loans. That's not only consumer loans or consumer loans, all right? Vineet Bhala sir, you can also unmute.
हेलो
हाय सर
हाँ जी
क्या हाल सर
बस बढ़िया बढ़िया और मैं कल तो नहीं आ सका था मैंने ऐसे ज्वाइन किया
कोई बात
मैंने क्लास लगा ली थी आपकी वो अब मैंने बस यही जानना कि ये सारा वैसे तो पूरा समझ आया एक एक पॉइंट क्लियर है
हाँ जी
लेकिन बस यही है कि ये जब वो उसको कैलकुलेशन करनी है जो उस पे वो वाला पोर्शन मेरा छूट गया था तो वो कैलकुलेशन आप एक बार फिर बता देंगे या अभी आपने वो करवानी है जैसे स्क्रीनर पे करवाएंगे या कहीं
स्क्रीनर पे करवाएंगे। जब टूल आएगा ना तो दोबारा कैलकुलेशन में आपको सारी समझ,
क्योंकि हम जरा उसमें हमारा थोड़ा हाथ तंग है।
कोई बात नहीं,
क्योंकि हम पुराने लोग हैं तो हमारा थोड़ा हाथ कंप्यूटर में तंग है, लेकिन कर लेंगे अगर आप बताएंगे आसानी से तो हम कर लेंगे।
कोई बात नहीं सर, कोई बात नहीं। आपका खुद का बिजनेस है?
नहीं, मैं इंश्योरेंस में हूँ। अभी आपकी वो सुन रहा था तो वो
सर
इंश्योरेंस का सेक्टर।
आपका नंबर्स में कैसे फिर तंग है? आप तो लोगों को बताते हो कि इतनी ग्रोथ
नहीं,
है।
वो हाँ तो समझ लगी ये जो, क्योंकि हम थोड़ा ओल्ड स्कूल से हैं तो हमारे से कंप्यूटर वाला काम जरा हम थोड़ा धीरे करते हैं, स्लो होता है
देखो
हमसे।
देखो विनीत सर, मेरे से
हाँ जी।
ज्यादा ओल्ड स्कूल कोई भी नहीं है इन्वेस्टिंग वर्ल्ड में। मैं इतने ओल्ड स्कूल ख्याल रखता हूँ ना कि आपको वही मैं बड़े बड़े बातें बताऊंगा कि यार सेक्टर ऐसे ग्रो कर रहा है, इंडस्ट्री ऐसे ग्रो कर रही है, कंपनी ऐसे ग्रो कर रही है। जो बिल्कुल लॉजिकल चीजें होंगी ना, हाई फाई फंडा
जी जी,
बिल्कुल नहीं बोलूंगा। जो बिल्कुल
ठीक
लॉजिकल चीजें होंगी, कॉमन सेंस चीजें होंगी, वही आपको समझाऊंगा और उसी के थ्रू इन्वेस्टिंग करेंगे हम।
ठीक है,
उसी के थ्रू
ठीक है सर।
इन्वेस्टिंग
थैंक
करेंगे।
यू,
मैं
थैंक यू
आपको
जी।
बड़ी बड़ी बातें नहीं बताऊंगा। लेट्स डू ग्रोथ मोमेंटम इन्वेस्टिंग।
नहीं, अभी अभी तक जो आपने बताया वो बहुत इजी है।
वही आगे भी वही रहेगा।
हाँ, अभी तक तो वो मतलब समझा जा सकता है, उसको समझा जा सकता है आराम से।
देखो सिंपल बात यह है कहने वाली, वॉरेन बफे जी ने, जो दुनिया के सबसे बड़े इन्वेस्टर हैं, उन्होंने पीएचडी नहीं कर रखी है।
जी जी जी।
उन्होंने पीएचडी नहीं कर रखी है, उनकी कोई मैथ्स की डिग्री नहीं है। ठीक है, तो अगर वो बहुत अच्छे तरीके से बिजनेसेस को समझ पाते हैं कॉमन सेंस के थ्रू, तो हम भी समझ सकते हैं। हमारे में भी वो एबिलिटी है और वही एबिलिटी हमें सीखनी है, वो एबिलिटी बनानी है।
मैंने पिछली क्लास जब आपकी लगाई थी मास्टर क्लास, उसके बाद मैंने इन्वेस्टमेंट तो नहीं की ज्यादा, लेकिन कुछ शेयर्स पे मैंने नजर रखी थी। वो मैंने आपके तरीके से ही रखी थी, तो वो सारे अच्छे, मतलब उसमें अच्छे रिजल्ट आए हैं। हालांकि मैंने बहुत ज्यादा इन्वेस्टमेंट नहीं की, रिजल्ट अच्छे आए हैं।
ठीक है, लॉन्ग टर्म में और अच्छे आएंगे सर।
थ्योरेटिकली वो सही थी मतलब।
राइट, थैंक यू सर, थैंक यू।
थैंक यू।
The next question by Rudra sir. Rudra sir has raised his hand.
So hi Akshay sir. So my question is like, you showed that the credit of any bank is declining. Can you hear me?
Sir, there's a lot of disturbance in the background. Can
Yes.
you repeat?
Yeah. So basically, you have shown that the credit of any bank is decreasing. The CAGR is 0.23% or something, but the deposit is increasing. Isn't it a bad indication for a bank? The top, like the bottom line is decreasing.
I'll just maybe give a disclaimer there. मैं आपको दोबारा बता देता हूँ, मैंने बोला भी था उस टाइम पे, मैं दोबारा डिस्क्लेमर दे देता हूँ। ये जो उन्होंने ग्राफ अपडेट किए थे ना, that was actually had real data till 2019. So this report was published in 2019. This report was saying 2019 तक रियल डेटा था, उसके बाद एक्स्ट्रापोलेटेड डेटा है, एजम्पशन है वो। ठीक है, तो 2019 तक देखो डिपॉजिट भी कमी थे। ठीक है, दो ग्रो कर रहे थे बट कमी थे। उसके बाद उन्होंने बोला था कि डिपॉजिट बहुत ज्यादा ग्रो कर जाएंगे, तो दैट डेटा इज नॉट रियल। एंड ऑल्सो डिपॉजिट्स ग्रोइंग एट अ वेरी वेरी फास्ट पेस, lending slowing down is a bad indicator for banks in general. In general, it's a bad indicator. I'll be talking about that. There's a particular like different kind of ratios that we have to look at, capital adequacy ratio, etc., etc. I'll be explaining those ratios also जब बैंकिंग की बात करेंगे, बैंकिंग कंपनीज की बात करेंगे। अगर कुछ ऐसे बैंक्स में ऐसा हो रहा है that loan book is growing at a slow pace, deposits are growing at a much faster pace, then it's a bad sign. Yes, awesome. Mr. Sultana, you can unmute, and then next is Mr. Anil Rani. Mr. Sultana, you can unmute.
Hello, Akshay. Hi.
Hello, ma'am. Yeah.
Actually, we have parameters for other sectors, right? Like P ratio or OC ratio to see how company is growing. For banking sector and asset management companies, for all this, do we have any such ratios that we can identify this will grow? And
so that's what I just mentioned. Before I go to the matrix, I will first have to teach you the very fundamentals or ABC of financial numbers. Right?
Oh.
There are many of you who might not even know how do you calculate profit after tax. There are many of you who might not even know what is operating margin. There are many of you who might not know how is cash flow different from profit. So first I will cover that. First I'll tell you how do you read like basic numbers in annual report. Then we'll go to ratios. Then I'll tell you which ratios are important for which kind of companies. Right? So there is a journey that we have to follow. I cannot straight away go to banking में ये देख लीजिए, chemical में ये देख लीजिए. Then you will not be able to understand anything. All right. So wait for it. Thank you. Yes, Anil sir, I'm allowing you to unmute. Hi sir.
Good evening, sir.
Good evening.
Sir, you told us yesterday that drop down can be 40 to 60%.
Yeah.
So I have been in the trading for last 4 years, and in fact I tried to find multi-bagger during the this period last 2 years when the market was after going up, and they really went up 6-7 fold. But the main problem, as you said yesterday, how to control the emotion, and even if it is dropping down, how to not to sell the stock. The psychology part we want to understand a little bit.
So I'll be talking about when we talk about allocation. तो वो allocation में आएगा कि entry और
Yeah.
exit कैसे करनी है. मतलब your question is specifically related to exit, right? Let's
Yeah,
say the stock is.
Sir, what was it? Earlier I was exiting. I was working with technical and fundamental combination. So on daily chart, whenever it was going down, I was selling. Then I switched over to weekly chart, then monthly chart. Gradually I become matured. But still that stability has not come.
So there is definitely some benefit that you can have with, let's say, a stop loss, right, on a weekly or a monthly, right? Even though we are an investor and we might not be looking at charts every day, but it might help, let's say, to have a weekly, let's say, stop loss, right? Whenever every Sunday we look at our, let's say, prices, and it automatically hits the stop loss if, let's say, less by 10%, 20%, and if it comes to the same price again, we can enter, right? But all that things, the logic to that will also be explained in the allocation, right? There's a separate class for that. I'll be coming there, and then I'll also be talking about psychology, which is your next question. How do we actually maintain the emotions, right kind of emotions, right?
Thank you. Thank you.
Thank you. Awesome. Mr. Ramkrishnan Balaji, last question for the day, and then we wrap it up. Mr. Balaji, yes.
Sir, do you... Hello?
Yes, sir.
Do you teach about alpha beta also?
I will tell you about alpha beta, but those are not important.
Okay.
Those are not important. Both alpha and beta are in context of the price appreciation. So they are more helpful in trading than they are helpful in investing, right? And both alpha and beta are lagging metrics. Lagging metrics. So what does alpha tell you? Alpha tells you how did the stock or the sector beat the index?
Okay.
Right. And beta tells you the volatility. Right. Now both these are relevant in the trading context, not very relevant in the investing context.
Investing.
I would not like to confuse all of you. Forget about alpha beta. We're not looking at alpha beta.
Okay. Thank you, sir. Thank you. Bye.
All right. How to find sunshine sectors? Tapan asking, do you have any tool to identify prior hand? Please respond. Sunshine sector means growing sector. There's no tool. This is the tool. This is the tool, and we will have to do some research, right? And we'll have to read reports, etc. Every week, if you start getting into a habit of reading about some sectors, then we'll actually get this data, right? For example, I'll specifically talk about one sector which was identified in the previous bootcamp, September-October bootcamp that we did. So we did all this analysis, sector analysis, and there was this person from the packaging industry, right? I remember the name also, Mr. Biswadeep. Mr. Biswadeep was a student's name. He was from the packaging industry. Now, the packaging industry, specifically the hard packaging industry, not the flexible packaging industry. Let's say this ice cream box is there, no? So this is hard packaging, right? Or let's say the boxes that you see for Swiggy food, Zomato food. That sector was out of my sight. I was not studying it. But because he was from that industry, he did some research, read some reports. The packaging industry, the hard packaging industry is growing at around 35%. 35% every year. And yes, Atul mentioned the name of the company also. The biggest leader there is Multibagger Packaging. Multibagger Packaging, amazing company. Amazing fundamentals are there. Amazing fundamentals are there. So I did not do that research. I am very, very frank, honest. My student from the previous bootcamp did that research because he was from the packaging industry. And he understood the industry really well. Right? So you can only do it with research. There's no tool made. There's no tool made. If there was a tool made, then there was no use of this in this bootcamp also. You can simply use that tool to get all the companies, to get all the sectors. All right. Great. Ankur has raised his hand, so I'll just maybe allow him to ask the last question and then we wrap up. Yes, Ankur.
So just one quick question. So we have seen that the banking stocks have underperformed in past couple of years.
Yeah.
So do you really think that there is some sectoral problem here, or is it that going forward the NBFCs are going to outperform the banking sector?
Yes,
What
I
is
feel
your view on
NBFCs
this?
are going to outperform the banking sector.
Okay. And any specific reason for that? Or
I showed you the reason. NBFC overall
Okay.
sector mein demand is growing at like 20 to 22%.
so do you advise we should sell out ICICI Bank, HDFC Bank, and move to Bajaj Finance? Or is it something that these are stable companies and we should
So
still keep them holding?
let us wait till, let's say, the next week's classes to take decisions on particular stocks.
Okay, perfect.
Let's not jump the gun here. I have only completed so out of 8 to 9 classes, I've only done 2 classes and only the first class on concepts, actual concepts, right? So I've only covered like 10% of the ground. All right, awesome. What are the themes for the next decade? I'll be carrying forward this discussion tomorrow also in FMCG in different kind of sectors, and then you'll understand what are the themes. Specifically, when I talk about value migration, you'll understand the themes. What are the themes for the next decade? Still questions coming. So Mr. Madan, Vineet ji saying Sat Sri Akal karo. ठीक है. Madan ji, हाँ जी, you can ask a question.
Sir, there are so many things to learn. So like YouTube and some financial website like Money Control, Economic Times, etc. But time is very important. So what to read, what not to read, or what to ignore? Can you be specific?
So every weekend, every Saturday or Sunday, whenever you're free, take out 1 hour. Take out 1 hour. After the bootcamp also, get into that routine. Take out 1 hour and make it a habit that whatever research you do in 1 hour, you also share with the WhatsApp group. In the WhatsApp group you are a part of for lifetime, right? And if all the people do that, we all get very knowledgeable, very wise every week, every weekend, right? So in that 1 hour, you do 30 to 40 minutes of focused reading on any particular sector or any particular industry or any particular company, right? Particular company or particular sector, right? Which means if you are doing research on one particular company, you're reading about the company, processes, businesses, etc., right? And then keep 20 to 30 minutes as a discovery time. Discovery time means discovering newer set of companies which might be interesting to you, and then make a list of those, right? So every week you will do focused research on one company or one sector, and then you'll also find 2-3 interesting new names which might be interesting. These you will note, and then you will pick it up next week. If you do this activity for like in 40 weekends out of the entire like 52 weekends in a year, if you do this activity on 30 to 40 weekends, you will at least come up with 3 to 4 or like 5 amazing companies to invest in. Right? This is the activity I do, and you'll be surprised, I only invest in 3 to 4 companies in a year. In 1 year, I invest in 3 to 4 companies. But that is enough. That is enough because I have full conviction, full confidence in these companies, and I'm willing to stay long term. I need not invest in 100 companies, right? All this will be covered in the allocation also. So let's not jump the gun. There are so many technical terms and reports for different sectors. Should we have some domain knowledge? You will develop domain knowledge with time also. If in the starting, if you do not have a good understanding of the specific terms, that's completely okay. With time, you'll get an understanding. That's all right. Okay. And I'm anyway here. I'm part of the WhatsApp group. So if you have any difficulty understanding anything, you can ask me. Even after the bootcamp, even after 6 months, even after 6 years, you can ask me. All right, great. Let's wrap it up now. Let's meet tomorrow at 7 p.m. It's already 9:30. I'm sorry I've kept you waiting for dinner. I know all of you are hungry. Now go have dinner. All right, cool. Bye-bye. Good night. Bye. Thank you.
Yes, before everyone goes, thank you, sir. Thank you for your class. And before everyone goes, I'll be sharing the feedback form in the chat. Kindly fill that feedback form, please.
Awesome. You share in the form in the chat also and in the group also.
Of course, sir. I have shared the feedback form. Kindly fill this feedback form so that we can know how your class went and how was your experience, so that we can further improve our to further improve based on your suggestions.
Company will
So-
give me rating. How am I doing?
Okay.
So you give me rating and then company will judge me. All right. But you give honest feedback. If let's say you did not like anything, please tell it in the feedback form also. All right, cool. Thank you. Good night. Bye-bye. Bye-bye.